Welcome to the HVAC Financial Freedom Podcast, a show to help you create more revenue, profit, and freedom in your life. Now your host, John Victoria.
Hello and welcome everyone to the HVAC Financial Freedom Podcast. If you've been following along on social media as we're doing these live, this is the third podcast we've done this week. A lot of incredible guests, and I'm really excited, especially for today's. And so our guest today, he is a CPA who specializes in helping HVAC companies grow themselves and in cradle to grave financial services. We're talking money with the money man. So we're going to welcome him on. Welcome to the stage, Brett.
What's up, John? How are you doing today?
I'm good, man. It's a wonderful Friday. How's it going for you?
All Fridays are wonderful. Love Mondays too, but Fridays are that much more special.
Yes, sir. And I think this weekend's a special one for a lot of folks. We got Memorial Day weekend. So it's for some folks, sometimes not the business owners, but for some folks, we got a 3-day weekend on our hands.
Vacations seem to never strike at the right time, but when you have the opportunity, you should definitely enjoy the moment.
Yes, sir. So just to kick it off, for anyone who's not familiar with you, would love to just give a quick background on who you are and the things you do and how you got to where you are now.
Yeah, I mean, that's probably a crazy answer. Definitely up and down roller coaster. Ultimately, the end result is high velocity accounting with my wife, Neal. Together, we are CPAs that specialize in HVAC, primarily accounting. But the road there is kind of what's behind me, the airplane. I started out as an aircraft mechanic out of high school. It's where blue collar kind of meets white collar. Later ended up in an accounting class and found that it was the language of business. And it kind of just connected. Unfortunately, it also consumed me for about 15 years. So working on getting the CPA license and studying GAAP, GAAP accounting.
Oh, the GAAP.
Right. Yeah, exactly. It was all good stuff. So happy to put it in my pocket. And then along the road, CPA firms are like gas stations. There's one on every corner. So how do you stand out? It's important to niche. And really just hit it off with a special person. We had a great connection. And I found my niche, and it was in HVAC. I've got to watch the industry mature a little bit since we've entered it, and it's been great to see.
That's awesome, and I have a fun question for you later. We don't have to answer this now, but I mentioned GAAP. We actually have someone talking on Profit First next week. So are you familiar with Profit First? And so we'll get into that later. But that just came up, but so I guess just to kick things off, you mentioned that really, finance accounting, it's the language of business. And at least from what I found, a lot of the folks who get into the HVAC or even the home service space is that they don't start off with understanding all of, the different business concepts. They get in because they have the skill. It's really valuable. They want to be their own boss. And, hey, let's see if we can make it work. And so they don't necessarily have a lot of those different hats, one of them being finance. And so I was wondering if you could just talk initially about, some of those initial challenges someone might have or be experiencing when it comes to, putting on that finance hat or understanding their numbers. Like, what does that look like from what you've seen?
Yeah, putting on the finance hat, right? And that's ultimately the end result is wanting to understand the numbers. Unfortunately, the numbers can be kind of crazy. I kind of like to start out, even accountants themselves are not necessarily good business people, because just also as a tech in the truck, someone who is kind of entering the world of accounting is maybe seeing the process, but not necessarily understanding the outcome, and really getting your head around that big picture where you're heading. Accounting really helps tell the story. Unfortunately, it is its own language, and I don't want to say it's complicated. Chat GPT just passed the CPA exam, so I can retire. Right. But it's tedious. And what I like to tell guys that are getting out of the truck is accounting is tedious. Number one. Number two, don't become an accountant, right? Don't get out of the truck just to become an accountant. I'm going to learn QuickBooks and I'm going to figure out this. Spare yourself that, get to the point where you want to know the numbers. And then that's where the struggle is. It's like, okay, I understand that I need to have a balance sheet and a profit and loss statement. And it's not even just, then it's like, if you were to reverse engineer that, okay, how do those numbers get into those right spots? What spots should those numbers be in? How do those numbers get into it? How long is that going to take? And just what does that look like as a process? And then how often are we spitting these numbers out and reading them? And do I know they're right? Is there anyone verifying them? So, I like to play around and be creative. Anytime I start doing something in Photoshop, it starts out looking nice. And after about an hour, it looks bad. I've messed it up entirely. So I know it's each to their own in experiences, but spare yourself some of the struggles, right? If you're trying to grow a company, get someone in there that can just help you get those numbers right.
Love that. And maybe there's a follow-up question, like what is that baseline? Because back from my time, back in the Navy, it told us inspect what you expect. And so I'm trying to, I guess I'm maybe trying to clarify for everyone, like what is that baseline? It sounds like a key piece is definitely partnering with someone who has the deep expertise to do this. But for an owner, like what is that baseline for them to, is it to just know the terms, or is it to like really be able to understand like, oh, these are the, what the number should be? Like what's that baseline someone should be at?
Gosh, I mean, great baseline. And this is what we do too, is really just print out that first profit and loss statement, and may as well print out your balance sheet too. We like to say that the bodies are in the balance sheet, kind of the details are hidden in the balance sheet. But pull out your first profit and loss statement, and I would say get to know it, mark it almost like on a board, and start printing one every week if you're filling in your data, and look at it week to week. Month to month probably is going to be more reasonable for most people in the beginning.
Yes.
And compare, right? A profit and loss statement can tell a story in a singular month, over a quarter, over a year. But what really is helpful is to look at it month to month, quarter over quarter, maybe over a budget, so that you can see where you're heading. And, like you said, start measuring it.
Yeah. I love that. And that can be intimidating, right? If someone's not a numbers person, like getting into that. But as you said, it's like so important just to, see where your company is going. And also, like, if you want to project in the future, hey, you want to make certain investments, you want to grow here or there. If you don't understand your numbers, then, that puts you in a tough spot. And so maybe it's because you talked about the partnership with, working with someone who, is really good at the numbers. What are some of the things that you'd recommend someone look for in that individual?
And someone they would partner with?
Yeah. So let's say they wanted to bring in a numbers person, whether it's external, internal, like how do we find the right person? Right. Because you are trusting them in a way. It's like faith. Like, I don't know this thing, but I need help. I need a partner. And so what are some of the things that you'd recommend people look for when it comes to that?
I mean, just like trusting someone with, someone on my roof, right? Or someone in my attic and telling me that they've done the job or installation correctly. I'm also trusting home service professionals. I mean, there's a lot of ways, just because CPA is behind my name doesn't necessarily breed confidence. There's a lot of accountants and CPAs out there. Industry and understanding the niche is a great start. But it depends on where you're looking. If you're going in-house and you kind of want that control and oversight, then I think you're just looking for stability. You're looking for good character, right? The same things that you would want in your culture.
Yes.
Externally, gosh, I mean, you have the world in front of you at your fingertips. I would definitely talk and share with different. I know there's, there's very similar accounting firms out there that do what we do, kind of the cradle to grave, collect data, prepare a presentation, go over it with the owner on a quarterly, monthly basis, and talk about future outcomes. I always said this about lawyers or even other CPAs. I love interviewing other CPAs. Is it something you can mesh well? Know, like, and trust. I mean, start with just the basics. We all kind of have to trust that yes, what someone said they can deliver on a little bit, right? If somebody tells me they can install a complete system on top of my roof, I have to trust that they can do it. I can look at other reviews and things like that. But at some point, there's going to be a certain level of trust. And then what don't do, what is that? What book is that? I shouldn't go that route, but is don't abdicate. It'll come to me, right? Yeah. So don't just say, hey, my accountant has that. My accountant takes care of that. Definitely get in there, ask questions. Oh, why did you put this expense in that category? Oh, okay, that makes sense to me now. Right? Why did the profit and loss statement get broken down this way? And to back that up, niche accounting, industry accounting is, if I provided you with a GAAP profit and loss statement, that would pretty much be useless. Right? So what we want is a financial statement that gives us a story that breaks down gross margin, profit margin, top five. If you're a Nexstar network person, then something like that, right? Your automobile expense, your overhead, things like that.
Love that. And I've heard that was the book you were referencing, The Road Less Stupid, by chance?
No, but I'm gonna write that one down. That sounds good. No, it's the it'll come to me. It's all right.
Yeah, well, for the book, so The Road Less Stupid, Keith Cunningham, amazing book, amazing training for CEOs. And one of the things he mentions in there is about delegate, but don't abdicate, right? Abdicate is like, throw my hands up, whatever, like you got it, and just having blind faith.
Right.
And I think that can be dangerous, because if you don't know what's going on with your books, and there are some less than great characters in your business, like you're just that can be bad. And so super great book, highly recommend for anyone who wants to check it out. But I think that's a big takeaway. Don't abdicate your responsibility. At the end, it's still your business.
Yeah, well, I mean, I hear so many stories there. I don't want to put a name to anything, but anyone who has access to money should be watched, basically. Right. And it's human nature. A dollar bill is easier to pick up, obviously than to take a vehicle off the property. But without controls in place, you won't know that those things are happening. And yes, everything comes with a cost. Is it worth that cost to control it? Is so much going out the door that we need to really look at that? I mean, you're going to know that as you grow, right? I mean, we talk about that with inventory a lot. I mean, we're really going to try to look for loss on inventory in smaller companies that could cost a fortune. But can we look for loss where checks just didn't make it to the bank? If House Call Pro says that, the money was received, but within a week it hasn't showed up in the bank register, it would be nice to have your accountant tell you that.
Yeah, there was we had another guest on, and crazy story. One of the technicians, they created their own like Stripe account, and so the CRM shows, hey, we invoiced this, but then they were accepting the payments on their own personal account. Like the only thing different was like the checking number. Right. Everything looked the same, and they were routing the money to them. And it's like those small things, right? It's those small things that if you're like, I abdicate, I'm not going to look at anything. You got the numbers. Like I'll just focus on what I'm doing. You'll miss things like that, which is absolutely crazy.
I believe the company's Billy Go. The gentleman is he Billy Stevens? But I haven't met him myself, but I've heard him on a couple of podcasts, and he says, we know our numbers by the minute.
Yes.
And I think that tells a huge story right there. Is that a big involvement? Like, is that a full-time position? Yes. But, is there a place for it? Absolutely.
Yeah. 100%. Yeah. And I know they got a nicely sized enterprise as well. And they're doing quite well.
Well, right? Does that tell, I mean,
yes, that's something, right? Success leaves clue.
Right? Yeah.
Awesome. And I guess before we hop into the 4 M's, just for everyone who might not be familiar with the term, like, what do you mean by cradle to grave financial services? Like, what does that really mean?
Well, it comes from my father. My grandfather used to own a mortuary and wanted me to be a mortician, and that just wasn't going to work for me but retrospect, as a CPA, it would have been a fun little business to be a part of and own. What we don't do is just bookkeeping. In order to give an individual the best tax position, I think it's important to fully understand. I don't need to know. So cradle is us doing the maintenance, all the bookkeeping, giving the full process, to grave, to, hey, in our journey together, you're going to have children. You're probably going to set aside money. Maybe you might buy a residential real estate. You might be partners in other S corporations or LLCs. How will that affect your ultimate outcome? So cradle to grave is, and if I got bad numbers, I'm going to spit out bad results. So overseeing the process, making sure that we're getting good information in, that we have good financial results around the business, and that we're also able to consider, your W-2, your wife's W-2. You know, we may have done a tax plan around your S corporation, but your wife's a doctor bringing in $500,000. Like, I kind of blew that tax plan. So
Yeah.
it's important, I think, to be able to see. And I know EBITDA is, you're right, if we're trying to grow our company and we want to understand cash flow, but I also like to talk about EAT, earnings after tax, right? It's what you're left to eat with. So
Gotta eat. Yeah.
right, you gotta eat.
Gotta eat.
Right. It doesn't all have to be pain and suffering while you're trying to get there. You can enjoy it a little bit.
Yeah, and I think with there's two sides of people like that I've seen, and there's the penny pinchers and the people that are just very extravagant. It's like you need to be somewhere in the middle, right? You can enjoy your life along the way of building this enterprise over the next decade, 2 decades. Like don't kill yourself, but also don't blow or use all your powder.
It should be what your budget is. It should be what your budget is, and projected. I like to talk about forecasts and projections. Forecasts are what like the weather people do, right? The only job that somebody can be wrong 90% of the time and still be employed. So, right. So forecasts are just simply that. You know what? We're going to do 2 million next year. We're going to do definitely in the next quarter. I think we can do another 1 million. Those are forecasts, and they're built on a little round models and kind of what we know and what we've seen. But it's not a projection, and a projection is historical data with capacity, with what we actually have and what we think we can do with that, right? Based on the big four: booking rate, conversion rate, average ticket, and cost per acquisition. And then of course efficiency. I mean, you really need to know your efficiency if you're going to build out that budget. But when I say that, budget in the fun. You're going to have an end of year party with the crew. Maybe you're going to go rent a little real estate and take everyone out so they can go hang out on the lake. Let's start accruing for that. Let's acknowledge that we're going to pay for that.
And I guess just to distinguish between the forecast and the projection. So you said projection is when it's based off historical data. This is more of like the realistic goal, and the forecast is that just more of like, hey, this is the more rosy picture, like, oh, this is possibly where we could go, but it's not based off.
I mean, it could also be, it can be bad and good. Obviously, most people are gonna be good, but a forecast is just in most, it's not a projection. It's just, I just want to be careful and just kind of using the words specifically, because a projection is a budget. We're projecting that this is going to happen based on things that we know. Forecast for the year, or you can even forecast a month. Obviously, your forecast might be a little bit more correct.
Yeah.
You forecast out for a year, your chances of actually hitting those numbers specifically are going to be a little off. And then what is it? Just what is it based on? Right. It's hard to predict the weather 3 months out. Really, we know it's going to be warmer. But we don't know. I mean, so many years, year after year, the budget itself just gets blown up in the first quarter for HVAC companies, right? Like we just know January, February, March is going to be something. Let's put some numbers in there, and then it's hit and miss. But once you start to hit your capacity, you really start to see the numbers fall into place.
Gotcha.
That's the beauty.
I see. But both have a place, you're saying. It's like you'd use both in terms of your planning, or are you saying just use the projection?
Well, no, let's so I think you're right, saying both a little bit, but the projection is really what's going to happen. It's
okay.
Just the forecast is, like, how are we going to get there? Big picture, kind of like how are we going to get there? How many techs do we need? But a projection is going to be built around that actual numbers and efficiency. It's the budget. The projection is the budget.
Got it. Okay. Perfect.
Your forecast might be a little bit around market cap, right? Like, we can probably do, if we're 8% market cap, we can do 25 million. We would have to do X many homes. That's kind of a forecast. Are we going to be able to get there? Sure. All right. It's just loosely defined.
Got it. It's like the big picture. And if anyone's from attraction, the visionary is probably more about the forecast. Like, oh yeah, this big, hairy, audacious goal. We're going to do this. And then the integrator, more like the ops person, is like, nah, this is what we got. This is what we will be able to do based off everything that we've seen. So yeah, maybe that could be a good distinction. And
I guess I kind of like to bring it up a little bit, just in the sense that, I know that a budget, like people are like, oh, budgeting, like it's a painful thing. And because if it's not even really aligned around anything, for sure. Right. Like last March we did 480,000. So this March, we should do 520, and everything was a percent of that 480. So do we make everything a percent of that 520, or do we, well, rent's gone up, like, oh my gosh, what a tedious task, and what is it really built around? So I get why, people are like, why do I spend all this time doing budgets? But what you're doing is projecting, right? If I can project that, well, I know that I got 5 service techs on staff and I know how efficient they are and I know what they can perform, well, then we can start to back into some real numbers.
Got it.
That's the 4M framework. That's where we're heading.
Love that. Hey, well, let's hop into it then. So we got the 4 M's. And I guess the 5th M is that it's currently a mystery what these things are. So yeah, break it down. Like, how'd you come with the 4 M's and like what are they all about?
Yeah, whiteboard. I have to live with a whiteboard. I got notebook around me at all times. I love to dream up stuff and just make stuff. I used to see myself as really understood GAAP accounting and all the terms, and then we would do all these fancy journal entries, and we would give the results back to the business owner working at a larger accounting firm. And the poor individuals, they didn't even know how to post the journal entries, didn't understand what those results were giving them. Often we would affect their accounts payable or accounts receivable just to zero out balances because we wanted to get to a cash basis tax return. It was a huge disservice in the past to what was done for clients. Yes, they saved money. Yes, they got a tax return redone, but in no way were they building their business around working with their CPA. And so I said, well, hey, if we're going to do more bookkeeping, more of this cradle to grave, what's the point of it? And, pillars, businesses are built on pillars. Or a framework. Really, it kind of comes down to like a framework. And really, so the first one is maintenance. I say accounting is tedious. It's just not fun. It's repetitive. Unfortunately, technology is helping, but at the same time, that process still has to take place. Yes. The credit card has to come out. The check has to come out. A purchase order in some cases, right? A sales order, invoice, a matching process. So maintenance is number one, and we take that and we perform all of that maintenance for you, whether, people use like HubDoc or we use Dext, DEXT, to scan and record receipts, get invoices, record it all into your platform, preferably right now, QuickBooks Online. If you're growing, might be something like Intact. I don't know. There's other ones out there.
Stick with what data in there.
Stick with what works and what's known, but get the data in there. Build the chart of accounts, recognize that is also moving. You might have some new expenses. You might take on different categories. So the chart of accounts itself is not just fixed. You might play around with financing fees being a reduction of income or a cost of goods sold. It kind of depends on what side you're on. Right, stuff like that. So it's just getting it done. Maintenance. Don't want to beat it up, but you get the idea because it's probably where it's the bottom of the triangle. It's obviously where the most of the heavy lifting takes place.
Yes.
It's the behind the scenes stuff that you don't want to see. That's why I say don't get out of a truck to become an accountant, is because of the maintenance side. No fun in it. But then once you have that, you have metrics, the second M. Metrics is financial statements, KPIs, key performance indicators, and just gross margin metrics, right? The percentage in the profit and loss statement. So what we like to do is just print a profit and loss statement for the month, look at it as a percentage of income. So each line item is a percentage of income. That's how we're going to get to cost of goods sold. That's where we're going to see our vehicle costs, direct labor, materials, equipment, right? That way we're measuring it to how well we did that month. There's going to be some variances. You might have had 5 payrolls in that pay period. You might have, your vendor might have kind of stacked your warehouse with a few extra units. So depending on how you're going to do inventory can distort stuff back to maintenance, right? But again, metrics is the picture. Now you got financial statements, you have KPIs to work around, and then you have metrics. That begins to build consistency, kind of like how we opened the show, John. What's the baseline? Well, the baseline has got to be one financial statement at some point.
Yes.
And then, right. And then
Please.
start. Right? And, when the days go by, no matter what, I don't know, Tommy Mello, what's he say? Underestimate what you can do in a year, overestimate what you can do in a year. Right. Yeah. So let the days go by. Don't, it's not going to all happen at once. 1 month, 2 months, 3 months, a quarter. Now you're seeing 6 months. I mean, gosh, wait till you get 2 years of data in there. Like, oh my gosh, this is actually working. I'm starting to see a consistency here, which gives you then that opportunity to be a manager. Once you have good maintenance, the numbers are secure, then you have metrics, financial statements to look at, KPIs, you're able to become a manager of the business. You can sit with a crew, your board, your staff, your partner, and say, hey, is what we introduced this quarter, was it working? Right? Did our marketing hit? Was our efficiency better? Was our new guy John as awesome as he says he was? You have that ability to compare your notes and make a change. Stay the process, less of it, more of it, and be the manager. Once you have that, then it's all about money, and that's the last M. Cash flow. I talked about not sales tax, tax returns, income tax returns.
Yes.
Right? It's different between being, I won't bore you, between being an S corp and an LLC and a partnership. They all have different taxations tied to them. So once you're on the top of the triangle and you can really see the big picture, you've made your decisions about the company. Then you still have opportunities to say, hey, do we want to continue being an S corporation? Has the tax law changed that we should consider now being a C corporation, which is irreversible for 5 years? Right? Big picture stuff. Do we want to consider doing acquisitions? If whatever that road is heading you down, you're going to have a much better platform to springboard off of. And that's basically the 4 M's. Each one, maintenance is daily, metrics, monthly, quarterly, weekly, management, probably monthly with us if you're working with us, and then quarterly and annual on the money side, looking at long-term cash flow. Hey, well, you're holding on to bonds, you're paying a little bit in interest, credit card debt's getting high, you want to buy a truck, you're looking to add a building. How is that going to affect cash flow next year and next quarter, and what do we need to do to be ready for it?
And this is sequential, right? It's like I'm imagining like you couldn't do this unless you did sequential. Like you can't just hop to management if you have no metrics or key KPIs, or if you hadn't been doing any maintenance. So is this sequential? So it's maintenance, metrics, management, then money.
Yeah, I mean, if you're working with us, we would build out a plan, a lot of talking. I always say, how do I not be a big thorn in your side in the beginning? Because I have a lot of questions. What's this expense? What's that? Why did this take place? How does your operations look like? Why did you collect money that way? Just to understand and see what's going on. So yeah, but at the same time, we're all entrepreneurs. I'm assuming if you're listening to this podcast, you're probably a business owner. You're probably an entrepreneurial mindset. So of course you're going to already be in that management mindset mode, dreaming one way or another, but take notes and prepare to go around that.
I love that. The 4 M's. And in terms of a rollout, like how long, let's say someone, they have some things going, but it's not optimized. Like how long would it take to roll out the 4 M's for someone who it's like, hey, we've been doing stuff, but we want a clean slate. We want to, get things better. We want to have clarity on our numbers. We want the 4 M's right. Like how long does it take for a rollout? Is this something that's like, hey, this is a plan we're going to build out over a year and we're going to execute and then get it ironed out? Or, oh, this is something we do over a quarter? Like how should people be thinking about getting something like this done?
Well, I laugh because, so HVAC guys stopped talking to me in like May, right?
Yeah.
and then I can't get on the phone with them back until like October. So that tends to lengthen that period. And then unfortunately, just as CPA's tax season, January, February, March is brutal, but also tends to be an onboarding season for us. I do tell people basically 90 days to get an idea, 30 days to be able to see the whole system. Right. But like observe, make sure every bill came through, maybe make a little analysis about the year based on 1 month, what I've seen, hopefully have some historical records, things like that, just extended. If there's a transition between another CPA over to us, or bookkeeping over to us, or if we're going to work, with somebody internally, are they going to be there? Are they there every day, right? Sometimes the internal bookkeepers just shows up on Fridays and kind of post things. And I'm like, okay, well, if we're working with them, that will delay things, right? If I can't get information every day. So, but I really do aim for 90 days for a clear presentation of where you are at and a forecast of where you could be. And then if we want to move into a projection based on numbers you're going to tell me, that's the next step. Then we build out that projection and create a budget put it back in QuickBooks so we can test on a monthly basis.
That's awesome.
I mean, it's fun. It's fun because once the numbers are in there, you know why, right? Like, oh, its stock was up this month. Oh yeah, well, we bought a truck and we stocked it. Like, it's just so the story is there, especially when you got to see it. You were part of the process, making things happen. We hired Tim and we had 5 payrolls. That's why payrolls through the roof. Do we want to do accrual journal entries?
And I guess building off of that, so we got the 4Ms, and in our conversation prior to this podcast, you shared with me, we don't have to talk about their name, but a company that basically like 10x'd, right? They grew tremendously, and so a lot of companies may be doing some form of this. So I'm just curious, like what distinguishes those that kind of grow linearly and then some that grow like exponentially? Are there any like best practices, key decisions, or ratios that you saw them maintaining that could be like helpful for our listeners? Like, oh, I should be doing this, or I should be expecting this when this happens. Like, what are some of those trends that you've noticed for the companies that really do break through in a big way?
So everyone's gonna love this. It's mindset. I mean, at the end of the day, it really is mindset. We've worked with venture capitalist type individuals, right? Hey, I have a lot of money. I'm buying this company. It's going to be amazing. It's going to be amazing. and in a month, right? And in a month and in 3 months, it's not amazing. And it's because you can't just throw money at it. So I would say, like, with the company that 10x'd, I mean, the gentleman was in it to win it, right? He didn't go home. Like, he lived it, and he was a huge supporter of his people. He was offended if I couldn't remember a name. I'm out here in California, and he's in the Midwest, and he was growing his staff, and I was like, oh, who's, and he'd get offended, like, dude, that's my buddy. Like, yes. So I made it a point to go out and remember everyone's names. Culture really is what I see time and time again, number one. The companies that don't do as well, there's internal conflict, there's ego, or there's fear. And I totally get it all. Like, it is hard I'm non-confrontational. I don't enjoy it. I definitely don't want to be that person. I love the idea of being the cheerleader. Being a leader in itself is hard. Accepting blame, right? Taking blame, acknowledging that things need to get done one way or another. That those things are they're tough. Having the support, like, hey, we said we were going to sell 25 units. You said you were going to sell 5. If we did that, then we would be able to, make these accomplishments and hit these goals. The financial statements are showing that we're not there yet, right? We're pacing ourselves on day 1 and we're not there yet. Day 3, week 3, we're not there yet. So we need to fix something. So in that sense, I think that's where I get back to knowing your numbers by the minute is the crucial reality. How many phone calls did we get today? What's our closing rate? What's our booking rate? And, it's hard to say on day 1, how well are we moving along, but you still got to do it. It might hurt, but by day 3, you might be catching up again. And by week 2, you can see how well you're pacing and any changes you need to make.
I see that as a key right there, right? For accountability. It's not like based off a gut feel. It's like, hey, we have numbers that we're tracking. These are the goals that we stated, and look, here's our performance. We're above it or below. It's no longer like an emotion thing. It's like these are our numbers, right? This because we've set up the 4Ms, we got the maintenance down, we have our metrics. It can become a different conversation. And it's like, I feel like you should be doing this or that and this and that, but it's like, hey, this is where we're at, and we need to make some changes. We're not tracking for our goals, which we said were important to us.
Right. Right. For a team, I mean, we can all be in these podcasts and read all these books all day long, and it's so hard to share that information. Like, I see it and I feel it, but how, like, you just don't see it today. Like, but I would say, like, business owners are calm. My goodness. Most of them are very calm.
Yeah, they are. They need to be, right? I was speaking to someone today. They said, something about the head is the head that wears the crown. Oh man, I forgot the quote, but basically it's like the person who's wearing the person who's a leader, like there's a lot on their back. There's a big burden on them. And yeah, having that mental fortitude just to be calm. And I know I've been a part of like EO and, these different groups, and they're really big into wellness, the wellness retreats and just staying calm in this storm that's out there.
I'm a pretty excitable person. It's tough sometimes.
Right.
Like action. I want to see it now. Like, let's go. So I'm the worst. If there were 10 rules, boy, they'd have to be right there for me every morning to read. Like,
yes.
The way to keep me focused.
Is there any advice you'd give? Because it seems like culture was that ingredient, culture / mindset. What would you advise someone who they need to reverse their culture? Like it's like not good right now. Like the things you mentioned, the conflict, the ego, and they're like, oh, it's here. How would you recommend like making that shift to move towards a more positive culture and a more positive outcome? So it seems like that's like one of the key ingredients.
That's an amazing question, John. I have absolutely no EI, emotional intelligence. It's somewhat typical of accountants, with a little coarse at times. And I struggle. I try to use empathy. I read books just to be a better person, to learn to listen. And I still am horrible at it. And I even have 2 little kids that help me to want to empathize and understand where they're coming from. So I can only imagine, I think the biggest thing is you take a look in the mirror and go, I'm the one doing this. Right or wrong, it's me. So, just accept that. Like, it's nice to enjoy, everything's going great, but why? Really why? And can that last? And everything sucks today. Well, you got to make a change one way or another. I was talking with this other gentleman, a roofing contractor, and he was like, why would you do anything like difficult? Why would you put up with difficult scenarios, right? If you don't have to. There's plenty of there's enough people, but there's not enough time. And I don't never want to like step on people, but it's like if you're just button heads and it's not working, and hey, we have gut instincts, listen to them, whether right or wrong. You got to make a decision and move on it, and don't just belabor it day in and day out. And I do that to myself, and I think, man, why are we doing this? It's so much nicer once you got it done.
Yes. Love that. And love the transparency as well. And it's like, I guess maybe another question. I mentioned profit first earlier. Profit first it seems really popular in the business world. It's, for anyone who's not familiar, it's a system. It's based off a book. Mike Michalowicz. I never pronounce his last name. Michalowicz. That's what it is. Yes, it's we've implemented it in our company, but then we've shifted from that. And in the book, they talk about how the way they do profit first might not always be similar to what your accountant might want. And so I'm just curious your perspective. From your side of the fence, like if you're familiar with it, like any thoughts around profit first and how that all works.
Yeah, I mean, there's nothing wrong with the envelope system. Well, I'm gonna compare it with Dave Ramsey. I think Dave Ramsey is also a great individual, but at the same time, I mean, debt's gonna get people right now. Dave Ramsey's very right with the whole, right. But over the last 10 years, he wasn't. People were probably missing out on opportunities to use debt to finance their dreams and could have made some money off of that. That landscape's changing a little bit, but what Dave Ramsey is good at doing is helping people who just don't have a clue and understanding. I didn't have a clue. It wasn't, I'd actually bought my first little pickup in S10. And then I took my second accounting class and we learned amortization schedules and how much interest costs. Literally like lost my shirt. It was like, oh, what have I done? I had no idea. I had a loan to pay. It was only a $12,000 pickup. I had a loan to pay on that pickup. And I realized it was going to cost me like $1,500 extra or something like that. And I was like, oh my gosh, heartbroken. So you you do that on a house, on a $500,000 house, and 40 years or 30 years, and you see what interest is going to cost you. It changes things, right? So there is some having financial acumen, knowledge, definitely helps. But I kind of lost track. What was the question? Like, how do they
Oh, the profit first
profit
and
first?
yeah.
Containing is my thought, right? Because if we don't fully understand, then it helps contain. So profit first is great for that. The envelope system, it's kind of what they've kind of done for you is say, hey, in general, these types of businesses have this kind of gross margins, which means their cost of goods sold are this much. So why not every time? And it's we all accountants do this to every business owner, which is tax. It's like, hey, don't just take that revenue dollar and think it's all yours. You got to at least have set aside some money for tax. So I think profit first is great for that. I get back to the M. It's a little tedious. I mean, I don't like one bank account, let alone more than one, and transferring the money when really a profit and loss statement with the correct margins is telling us that.
Yes.
Right. That's exactly what a well-rounded profit and loss statement is doing. So, and then if we fall outside of those parameters, it's going to catch it faster than my bank account's getting empty. Do I need to allocate more, or do I need to go talk to my vendor and get better rates? So right. So one is good at protecting us, but the other one's but profit and loss statement, it's not GAAP accounting, it's industry specific financial accounting, is going to give us insight, right? Not just protect us, but it's also going to lead us to making a decision one way or another.
Love that. That's awesome.
But yeah. I think both, I think everything is great out there. I mean, I read Profit and Profit Loss. What is it called? Profit First. I cried in the beginning. I was like, oh my gosh, this is horrible. And his daughter gave him money. Like, that's, so, it was inspiring.
Yeah, 100%. Yeah, time and place for us as well. Like we'd started off with it. It was great, but then our needs changed. And so, we had to shift to something else, but it's really great, especially if someone has zero system. It's good to have some system, especially if you like spending, right? With this consumer culture and, most Americans and a lot of people in the world, paycheck to paycheck, this can protect the guardrails, but, maybe, as for business owners, maybe you're a bit more savvy and you might need something a bit different than that. So, but cool. So I think we're even close to the end of the podcast. So any last takeaways you wanted to make sure to share with everyone? Any action items you wanted to give everyone for the day?
Well, what's HVAC financial freedom? Like, what's been your main? What is financial freedom? What is HVAC financial freedom for you, John?
Yeah, hey, flip the script. Yeah, so for me, it's really freedom to do what you want with your time. I think that's really the crux of it, right? Money is just a vehicle. I think money unlocks energy to do more things, and your business, your HVAC business, is just one vehicle to do that. We've had some guests on the podcast, and they've sold companies. One of them actually took it on their yacht, and we were just like chatting, enjoying life. And nice. For them, part of their freedom was taking their daughters, when they learn about things in school, they learn about these far off places. They would actually take their daughters there, in the boat, and go different places and see it like with their own eyes. And I think that's a beautiful thing. Freedom, I think, is different for everyone, but for me, I think a lot of the keys to that will be contained within your business, understanding the language of money, and then really using that to get to where you want in life. And only you can decide where you want to go. It's up to your mindset. So, yeah, flip the script on me, huh?
So, I mean, the mindset, because that's for me, like freedom would be a culture. HVAC financial freedom is having a group of people that you can rely on. A process that is there and in place, that you have the freedom to make choice. Go definitely do stuff with your family. I don't love tedious work, but I love work. I love being around people and talking about work. So, for me to just be on, as much as I want to be on a yacht, for like a couple of weeks, I would be so bored, So
you're like, let me do some stuff.
Yeah. But I mean, Elon's financial freedom is different than other people's. So
Yeah.
but there is a number out there that it doesn't have to be so big that you're on the radar, to be right, and that you can still be pretty much financially like free, like without doing, I mean, with owning good stuff on a, like beach type stuff, right? I don't want to say that number, it's in the millions, but I'm just suggesting if you have this number in the bank, you could live pretty well off of it and you never really be on anyone's radar.
Yeah. And I think it's really, that's the freedom. It's the option to choose what you want to do. I mean, if like I have one of our clients, they sold their business and he was on the golf course. I was chatting with him. He was like, John, I'm getting so bored on the golf. I want to go back to work. I want to start another business, but I'm on a non-compete. And so he's like, he's itching to get back to work.
That's funny.
But then some people, it's like they want to donate their time to a cause that's really important to them, maybe involved with a nonprofit. So, but it's just like the option to choose. I think that freedom is like what we all want at the end of the day, like to choose, not to have to do things because we have to do them.
I love the idea of being able to go out and kind of help others. We're definitely going to be sharing a lot more of what just the process, like really the maintenance side of it, just what are the tedious steps that we take so that other people can implement it if they want. But I was thinking about like you like mentioning helping other people, and my daughters right now, they watch Baby Boss. It's just hilarious. And they're telling him he needs to work less. And so he starts helping out. And before you know it, he's running the ship and he's telling people about overtime. And just hard to pull yourself away. So.
Oh, 100%. Yeah. That just like that work attitude just gets moved into the nonprofit world.
Right. Exactly.
That's funny. But cool. So if anyone wants to get in contact with you, like how are they going to reach you? How are they going to find more about you? How would they schedule a call?
Yeah, for sure. I mean, you can just email me, Brett, BRETT at High Velocity Accounting, HIGH velocityaccounting.com. That's our website, highvelocityaccounting.com. You can reach me on Facebook. Most people see us there. I'll always respond as quick as I can. We usually just set up a meeting if somebody does want to talk to us. We usually talk for about an hour, you get an idea of what's going on in the business. And if they want to make changes, we give those options to you. We don't, right. Was it not options, not a shoot. I give you options, not a ultimatum. So, right. It just depends on where you're at in your company. We can give you some feedback, talk about taxes, talk about cradle to grave, and just have the conversation. But we love HVAC, plumbing, electrical, home services, getting into roofing a little bit. But at the end of the day, HVAC is probably a little bit the most complex, moving most items, seeing the seasonality and that kind of stuff. But either way, we love the conversation. I love small business. I love seeing all these guys succeed, and ladies, men and women.
Yes, sir. Love that. Well, Fred, thank you so much for being so generous on the podcast. The 4 M's and best practices you've seen from companies 10xing themselves. I think this is very also helpful. Like I know a lot of folks have considered profit first, and I think just that conversation really helped folks. And so for anyone who tuned in, thank you so much. Let us know if you have any other questions, and definitely reach out to Brett. He does specialize in the HVAC industry, and so that's really that industry knowledge is super key. Just having your family accountant who, I don't know, they're just generalist and they just been doing your books forever. So definitely reach out, no obligation. And with that, take care, everyone. Happy Memorial Day weekend.
Yeah, have a great Memorial Day weekend.
Take care. All right, bye-bye.